Can copper remain an outperformer among commodity markets? Although copper prices did correct sharply in early April, they remain at historically high levels and have vastly outperformed other commodities with whom they typically have a strong relationship. Take crude oil, for example. From the year 2000 until the summer of 2022, copper and WTI prices tended to move in tandem. When oil prices were low, copper prices tended to be low as well. During periods of high oil prices, copper almost always became more expensive. Since late 2022, around a time that the US passed the Inflation Reduction Act, which made way for large investments in the energy grid and electric vehicle recharging stations, copper prices began to diverge from oil. EV sales in the US rose from near zero back in 2010 to 11.4% of all vehicles sold in the US by 2024. In China, the change has been even more dramatic. EV sales were over 50% of new car sales in 2024. This may explain why copper prices have also diverged from Chinese growth. From 2005 to 2021, periods of rapid growth in China tended to be followed by periods of exceptionally high prices for the red metal. Likewise, periods of slower growth tended to be followed by lower prices. But Chinese growth has slowed since 2021, and copper prices have gone on to new records anyway, powered by strong energy transition-driven demand from China and elsewhere. Meanwhile, strong global demand has collided with slow growth in copper supply, which has been among the slowest growing of all industrial metals over the past few decades. And little wonder, it often takes around 17 years to bring a new copper mine online. With limited supply growth, copper's future depends primarily on continued energy transition-driven demand.